I think the big issue was to move from a very narrow-focused company to a company with a wider range of financial services products. So initially it was just purely a sickness product, and then PPS outsourced the other products to other providers. Okay? What I did basically was bring the products back home and actually offer those products directly from PPS to the member. So that was the biggest change. And then obviously we share of wallet to get more money from the members, because we discovered the members wanted the PPS brand. So if they saw the PPS brand, they wanted that product. So that's when we launched Short-Term. That's when we expanded our healthcare offering. That's when we launched PPS Investments. So basically it was to give the existing members a bigger product range. Two big things. One, additional competition, new entrants, quite a lot of new entrants going for our professional market because our average premiums are very high, our lapse rates are very low, so everybody wants to get into our market. Much more competition. And then secondly, much more regulation. Phase compliance, FICA legislation, treating customers fairly. There's been a huge increase in the amount of legislation to which we have to comply. Commission disclosure, those kind of things. I would say that the growth in our assets in the last 15 years has been outstanding. I mean, we have grown at about 16% per annum for the last 12 years. So our asset growth has been phenomenal, would certainly be one of them. The opening of the businesses, healthcare administrators, PPS Investments, PPS Short-Term, our own short-term license, and now opening in Australia, I think those would really be the big highlights of the business. We looked at expanding geographically. We looked at the rest of Africa. The problem with the rest of Africa is you don't have critical mass. So you might have 2,000 professionals in Zimbabwe, and you might have 5,000 in Kenya, and you might have 5,000 in Angola, and you might have 100,000 in Nigeria. There's not sufficient critical mass in any of those countries from a numbers point of view and a premium point of view. So we had to find a market. We're not going to spread our resources over 5 or 6 or 7 countries.
Yeah.
It eats management time, it eats your resources. You've got to comply with the regulators in each of those countries. So we said, no, we're going to go for one big play. Where are all the professionals? How are they similar to South Africa? Are they in a strong currency? And Australia just ticked all the blocks for us. For example, you could invest members' money in, let's say, Nigeria, to pick an example, and suddenly their currency devalues 30%. Our assets just gone down by 30% for the members. So we made a point, we want to be in a hard currency. And the rand has devalued against the Australian dollar by 8% per annum for the last 10 years. So we know investing in Australia is a good decision anyway. Lots of professionals, double the number of professionals in Australia than South Africa. High earning professionals, similar degrees, the doctors, the dentists, they're similar degrees to ours. So we thought Australia is the place. Your problem, let's just take the UK.
Yeah.
Okay? Most of the doctors work for the National Health. If they become sick and can't work, the government pays for them.
Okay.
So you're competing as PPS with the government. There's huge competition from the insurers there. So why would we go to the UK? If I look at the USA, big market, similar issues there. Massive competition. And every state in America has different legislative requirements. So we'd have to register in every state. So America's not on. So we looked at Europe. Also very, very big social benefits. And you're competing with the government, basically. We have spent the last 5 years in the nursery phase, growing, developing, getting these new businesses up and running. So the next 5 is going to be make these things work. Get Australia pumping, get short-term pumping, expand our investment business. The next 5 years is going to be focus on what we've got. 5 years after that, we're going to have some very new strategies. And we've got some in the pipeline, but we will need some very new strategies in the 10-year horizon. I think it's been the fact that we're small and a niche player, and people don't realize that we're actually big. People don't realize we're a 30 billion rand asset company. Because we're so focused on a niche market, we don't have the huge brand awareness. So brand awareness has been our biggest challenge. And we've spent a lot of money in the last 5 years on building our brand, building our advertising, building our marketing. So I would say the lack of visibility of the brand has been the biggest challenge. I would like to walk into a room full of professionals and have every one of them, oh, you with PPS. Okay, at the moment if I walk into a room of professionals, only half of them will say that. In 10 years' time, I want every professional to say, oh, we're with PPS. We're all PPS members. That's where we want to head. I think you must do what's good for you. And I always say that to brokers, and I say that to members. You must do what's good for you. And PPS is good for you. It's good for the advisor because you get a good quality client with very high retention of business and very high premiums. So it's very good for the advisor. But the business model is incredibly good for the member. They get all the insurance, they get great service, and they get their premiums back and more when they retire, tax-free. So it's a win-win for the member and for the advisor.